our assurance, and Neha is our assurance manager. So, sorry, I'm trying to move this slide. Okay, so it's myself and Neha. As I said, I'm the partner for not-for-profits, and Neha is the manager for assurance. So she handles all the anything to do with assurance in the firm. So today we're talking about good good governance for not-for-profits, specifically financial governance. But let's talk about first governance in its entirety. So governance, this is governance, corporate governance. So corporate governance, this encompasses the system by which an organization is controlled and operates, and the mechanisms by which it and its people are held to account. Ethics, risk management, compliance, and administration are all elements of governance. And this is a definition from the Governance Institute of Australia. So you can see that governance is all encompassing. It's the whole system within the organization, how it is controlled and operates. Another definition for the Australian Stock Exchange is corporate governance is a framework of rules, relationships, systems, and processes within and by which authority is exercised and controlled in corporations. And it encompasses the mechanisms by which companies and those in control are held to account. So overarching, it's how the whole organization is governed. Okay. Now, financial governance. So that's a subset of corporate governance. So financial governance comprises the systems, policies, and processes that govern how finances are managed within the organization. It's the way the organization collects, manages, monitors, and controls financial information. So financial governance is a subset of corporate governance because governance is overarching. Okay, now financial governance, it is very critical in order for the maintenance of financial stability and performance. So we're talking about financial stability of the organization, right? Because you have to be on top of your financial situation or your financial systems in order to ensure that the organization is stable. It is critical for complying or ensuring compliance with relevant laws and regulations. Financial governance also promotes ethical financial management. And one of the most important pieces is that good financial governance allows the establishment of trust and confidence with the organization stakeholders. And I'm going to stick up in here because for not-for-profits, this is so important to have the trust and confidence of your stakeholders because you rely so much on them for your financial stability, really, for your funding, right? So, and your members to ensure that you are servicing the organization properly. So this one is very critical for not-for-profits. And also it is critical for the growth and longevity of an organization. And quite importantly, sometimes you think of financial governance like it's some theoretical thing. It's not theoretical, it's really very practical, and it starts with a mindset. And it is the responsibility of every member of the organization. So you have to have that governance mindset, that sense that you are trying to ensure that the whole system of the whole financial system is operating like a well-oiled machine. So as I said, it's the responsibility of every member of the organization. So let's look at that, right? Because sometimes you want to think that it is just one person's responsibility, but no, we have multiple responsibilities at all aspects of the organization. And I want to stick a pin here because as I was doing this slide, Neha mentioned to me that we needed to talk about small organizations. Because small organizations, the roles may be done by more than one person, but notwithstanding, there are some roles that have to be kept separate, right? For example, the board and the rest of management. It has to be kept separate, right? So let's look at the responsible party and what is your responsibility in the financial governance framework. So as the board, if you're sitting on the board, and I know we have a mixed audience here. So if you sit on the board, you have overall responsibility for financial governance. You set the policies, right? So that's policy setting, and then you can delegate decision-making authority and limits to management. And you set the financial governance tone for the organization. So in other words, you have overarching responsibility. You sit on the board, the buck stops with you. You set the tone. Executive and senior management. So you have the board delegates that they can delegate their authority to executive or senior management, right? And or just general management of the rest of the organization. And senior management. And so we're going, as we said, you remember some of the roles can be collapsed because you might have senior management and finance department in one, right? So let's just talk about in the context of a not-for-profit, executive/senior management might really just only be the executive director, right? And maybe the finance manager. So for those persons, and the programs manager, possibly, right? So then the responsibility is for under financial governance for executive and senior management is to have sound stewardship of the authority that has been delegated to you. You have to ensure sound financial management is demonstrated across the entire organization. It's your responsibility. The board has delegated that to you. You report to the board on policy compliance, financial policy compliance. Even though I said policy compliance, remember we're talking about financial piece of governance, but then remember governance itself is all encompassing. It's all, it courses through the whole organization. You also, as executive and senior management, you set the financial governance tone for the team members. From a finance department perspective, you plan, build, run, and monitor the activities, financial activities in alignment with the organization's financial policies. So you're working to policy. You ensure the monitoring of the financial health of the organization by providing data analysis and reporting to management. And you provide advice and guidance to other departments to help them to exercise financial governance. Now, for the rest of the organization who may think that they have no financial governance piece, of course they do. They have to consider the financial implications of all the transactions, of any transactions that they do. And if they're unsure, they need to always refer to the finance department for guidance. Let's just look at the board now quickly. We're going to look at each of them, but we're going to go through the board. The board has a fiduciary duty for the organization's financial affairs. And as I said, you had the overarching responsibility. Now, as a part of your fiduciary duty, you have under corporate law, right? And so this is legal, but many of you are under the Not-for-Profit Act. So the lawyers in the room, if there are any, will be able to say, but this is for general, for those companies that are listed on the stock exchange, because what you find is that for governance, not-for-profits don't really have, something framed by law. But under with the Toronto Stock Exchange and the OSC, they have lots of good guidance and they are like the gold star. So that's where you go to sometimes to find your good policies. And as part of that, under the OSC and the corporate statutes, they say that their directors have a defense to liability when they rely in good faith on the financial statements presented to them by the officers of the corporation or on the written report of the corporation's auditor. So what this means is that if you're brought to court to show, something happened and you didn't do whatever, you can say, if you can show your due diligence, that you relied on the financial statements presented to them by the officers. But that doesn't mean you just took the financial statements and because they gave it to you, you have to show that you did some due diligence on it, and as well on the report of the corporation's auditor. And the law permits you to delegate some of your responsibilities to an audit committee. So that's why you always see that you have the audit committee on many of the boards. And that is because they know that that is a specialist area. And so they say you can delegate some of your responsibilities, like the day-to-day, the nitty-gritty, to see exactly what's going on. However, the board themselves, all the other people who are not on the finance committee, you still bear the ultimate responsibility for decisions. And so the Finance and Audit Committee, really, their decision-making power is usually limited to recommendation to the board, because you notice that they would look at the financial statements. They would look at the financial statements, and then I think someone went on camera and needs to be muted. I think it's Agatha McPhee. Yes.
Yes.
Okay. So yes, so the board, as I said, bears ultimate responsibility. And so even though the finance committee, they may go into the nitty-gritty of the financial reporting with management, at the end, they actually come to the board and recommend approval. Right? So they don't have the approval authority, or they don't usually do, because if they go and approve it, then they have bound the rest of the board without the rest of the board even having a chance to do or say anything. Now, even though you're not a financial person, you may be a non-financial person on the board, this is expected that you have to have basic financial literacy requirements. So you would want to make sure you understand financial concepts, understand financial statements at a basic level, not to the level of being a CPA, right? But understand the basic financial statements. You have the ability to focus on certain elements in the financial statements, and you need to understand how to use financial information to assess the organization's financial affairs or a particular course of action being suggested by management. Because sometimes, you'll be in the board meeting and management will come to you with a specific investment they want to do, or they want to go into a special project, or they may even want to go after funding for a particular program. You should be able to look at that and assess if there are any financial implications to that, right? Because that's what you're doing, or that's your responsibility from a financial perspective on the board. So what are some of the financial governance activities of the board? So you're going to ensure internal controls are in place to ensure the integrity of the financial reporting and legal and regulatory compliance. This is something that is a responsibility of the board. You need to approve and monitor financial budgets. You should be questioning expenditures. So again, these are governance activities that you need to do from the financial governance activities you need to do from the board perspective. Question management's financial statements and other financial information that you have received. Ensure that the statutory obligations are fulfilled. We have a table going later on in the presentation to show you the types of statutory obligations we're talking about. You need to be, you recommend, as the board, recommend the appointment and compensation of the external auditor. So you should be getting to see that engagement letter. You should oversee the work of the external auditor and resolve any financial reporting disagreements between management and the external auditor if it gets to your level. It really shouldn't. If there are going to be non-audit services, then you need to approve those, and you need to approve the organization's financial statements. And sometimes you may believe that, oh, you don't have the skill set. It can be as simple as asking the CPA on your board to take you guys through how to deal with a financial statements, or you can get external training just on financial governance, deep financial governance for the board. So some tools, financial governance tools for the board. You have the board reporting package. And that is a package that that management should prepare for you that has all the relevant information that will allow you to look at what has happened over the organization for the last period, as well as maybe something in the future. So it could have forecasts and all those things in there. So there are lots of different things that you can have in your board reporting package. There's no real prescriptive thing. You can look at it. I mean, in our firm, we have a board reporting package a standard board reporting package that we prepare. And those are things like financial statements, variance analysis, ratios, all those kinds of things. But it's obviously on request. You can also ask for an internal control review. You ensure that your policies are updated. You look at your audited financial statements. You can request special audits. So these are activities that the board, the tools that the board can use. In terms of executive and senior management, what are your financial governance activities? You have to ensure that the internal controls that the board said, or the policies that the board had, you have to ensure that those controls are in place and operating effectively. You are also going to be, you're going to be monitoring financial performance. So, for example, actual versus budget. You're going to be reviewing financial statements or other financial information that you have received. So you don't just let it move straight from the finance department or the bookkeeper straight to the board. No, senior management needs to look through it to make sure that it makes sense. Ensure that the statutory obligations are fulfilled. Are you on top of all your CRA obligations? And that's one of the things that, in your board package, if you're thinking of getting a board reporting package, you should be thinking of having a page in there or something to show that you are in compliance, that the organization is in compliance from a statutory perspective. You will want to be working with the external auditors to ensure that the completion of the audited financial statements, and you are going to also be providing the board with the information it needs to exercise its financial governance and oversight. So as senior management, when you're in the finance committee meeting or you meet with the treasurer to find out what it is, what reports they want in order to help them to see what's going on in the organization, you can suggest some to them, right? Like the basic ones, the financial statements, the variance reporting, statutory compliance, the bank recs, all those kinds of things, different things that they can look at to give themselves comfort that the organization financial governance is in place. The finance department itself now, so these are the actual, like in some organization would just be the bookkeeper, right? So if it's the bookkeeper, then, implement financial controls and ensure that they're operating effectively. So whatever controls that are there, if something has to be signed, it have 2 signatures, it has to have the invoices attached to it. It has to be within only the executive director can approve certain limits. Other than that, it has to go to the board. All those things, the finance department has to implement those financial controls and ensure that they're operating effectively. The finance department records the financial transactions. They collate it and get it into a set of financial statements. They also produce the reports that are useful to management, right? So because it goes from the bookkeeper to the executive director so that the executive director can look it over and see that it makes sense. Or if you're a big enough organization and you have a financial controller or finance manager, they would look it over first to make sure that it makes sense, right? And question things. You have to ensure that the organization is in compliance with its statutory obligations. So you'd want to have a timetable to make sure you know that you're filing the things to CRA on time, you're filing stuff to Ministry of Finance on time, EHT, WSIB, all of those things. That is within the ambit of the finance department. That's operational financial governance. You have to work with the auditors to ensure the completion of the audited financial statement. So you would be making sure that schedules are done, right, or available. You prepare the board package. You're the one who actually gets all the data together and prepares it. And then you provide guidance to other departments on the financial implications of their transactions. And a key area where this is like working with the programs department, because in the finance, in the not-for-profits, you would have you have grants, and you may have to prepare reports for those grants. And some of those inputs are not just from the financial statements. You may need inputs from the programs department. So you have to provide guidance as to how they can give you the information in a useful format for you to put into the final report, right? Even things like on the T3010 for some of you who give grants, you have to be able to do some new, since 2 years ago, you had to do some new reporting where you have to report on grants which are over $5,000. You have to do some individual reporting on that. And so you have to loop your programs department in on that as well to make sure that they're giving you the information in that format that you need in order to get the work done. Okay, so we're moving quickly along to, these are some of the compliance that you would have with Canada Revenue Agency, because you have other compliance requirements. So you have the T3010 if you're a charity. If you're not a charity, you wouldn't have that. Corporate tax return, you have not-for-profit. They would be having, it's a not-for-profit that would have to do those, not the charity. Payroll remittance, it can be monthly, or sometimes depending on the size of your payroll, I think you can do quarterly remittance. And if you don't adhere to certain things or certain performance measures, I think CRA will push you back to monthly. HST rebate, charities are eligible not-for-profits. You have to do that semi-annually. Your HST return if you are registered with CRA as a HST registrant. And part of it too is to recognize whether or not you ought to be registering for HST depending on your how you're collecting revenue, because you may have membership fees. Right. And some of those membership fees, if it's over a certain amount of dollars, you should be collecting HST on that. But then again, that is something that we'll touch on later in terms of ensuring compliance. Other compliance requirements, EHT, if you have over $1 million in payroll, WSIB, and the annual returns with the Ontario Business Registry. I believe it's only the not-for-profits alone would do it, but Ken and the others, they will be able to tell you about that when they're doing their corporate seminar, the corporation seminar. Statutory financial statement requirements. So these are, since UNCA came into force, there are lots of different laws and regulations within UNCA that you have to be mindful of. One of them is the statutory financial statement requirements. So if you're Ontario Corporation, it goes by levels. So up to 99,000, you don't have to have either an audit or a review. You can just do a compilation. Right. And but if you go and appoint a public accountant, so you shouldn't appoint a public accountant if you don't want to. And by appointing a public accountant, I guess that's something the corporate secretaries will understand how to do that. That's not in my wheelhouse. I'm not sure how you do that appointment or how it's ratified, etc. But if you don't appoint the public accountant, then you just only need to do a compilation. If you're between 100,000 to just under 500,000, you must appoint a public accountant. and the public accountant must do either an audit or a review. Or if you want, by extraordinary resolution, you can do a review. And if you're over 500,000, you must appoint the public accountant and they have to conduct an audit. Now, by appointing a public accountant, it doesn't necessarily mean that just because you engage a public accounting firm, does that mean that you have appointed a public accountant? I think there is some sort of thing that you have to do to say that you have actually appointed a public accountant. So in the case of you, if you in the case of you just wanting to do a compilation, you just call up a firm and can you do it for me? Yes, they can, and you get your compilation done. Okay, if you're a federal corporation, it's the same kind of thing, but it's just that the buckets are different. Now, so you can, this is information that I believe you might have the slide. I believe that the slides will be made available to you, if I'm not mistaken. In any event, you have the recording. So another thing I wanted to touch on before we got on to Neha's piece was auditor and management responsibilities. I want to be very clear on those areas because sometimes in smaller organizations, smaller not-for-profits, and just because people are not, they're volunteers and you're not really, it's not your day job, so you're not paying a lot of attention to it. There is distinct auditor and management responsibilities. And in the smaller not-for-profits, I guess because it's smaller, they tend to rely a lot on the auditor, and then the lines get blurred, right? Responsibilities get blurred. So I just wanted to make sure that we understood what it was or what your responsibilities are. It doesn't mean that your auditor can't help you in certain areas, right? But understand where the responsibilities lie and where the lines are drawn. So for internal controls, management is, as we spoke about and as you saw earlier, you're responsible to ensure that the internal controls are designed, implemented, and operating effectively to ensure that the financial statements are free from material misstatements. So internal controls are your responsibility as management to design them, implement them, and test them to make sure that they're operating effectively. For the auditor, when the auditor comes in, the auditor obtains an understanding of internal controls, but only internal controls relevant to the audit, right? And they only look at it in order to determine if they're going to be using them, right? Not really to express an opinion on the effectiveness of the entity's internal controls. So we're not looking, when we come in and we look at internal controls, it's really a tool for the audit, right? To determine how are we going to plan our work? How are we going to design our work? What are some of the risks? Those are the things that we're using it for. Now, if when we're doing our work, we see something, then we are obligated to communicate that to the board. But it's not that when we're looking at internal control that we're looking at it to see whether or not it is if your internal controls are operating properly. So you wouldn't get a report on internal controls. But if something is wrong, we are supposed to tell you, and you will get that in writing for the board, not something for publication. We normally do it in our closing meeting. Related parties, that's another area. So related parties, you will know that especially for not-for-profits, related parties, people are really interested in transactions that happen between related parties, as opposed to even unrelated parties, right? So because especially not-for-profits are held to a higher standard, you get public funding, right? Or public donations, right? So you're held to a higher standard. So for related parties, in terms of from the audit perspective, management is supposed to establish the controls that identify and disclose related parties, and management is supposed to ensure that those transactions have been properly and duly authorized. Those transactions between the related party and the organization. So there might be a separate related party policy, And I mean, as the board should have that. That should be one of the policies that the board should have. And so when transactions occur, which are related parties, then management should have a system in which to identify those and to make sure they're properly identified, properly authorized. And they must identify and disclose those related parties and transactions to the auditor, because the auditor will not know the related parties within the organization or the transactions. The auditor's responsibility is to understand the related party relationships and transactions and the internal controls that have been implemented. We're also to look to see, is there a risk that the organization may not disclose all its related parties and transactions? And that is a risk in a smaller organization, the smaller not-for-profits, because you may not have the systems in place, right? So we then may have to do additional work in that, where you inquire more deeply of management, maybe explain to you what is related parties, what are related parties. And I know we have a checklist now that Neha gives for that, for related parties. And we also do our own digging. Once you have told us the names of people, we will look through the financial statements and any other relevant documents to see if we can identify those. So that's what we will do with smaller entities. And we are also to conclude on whether the financial statements fairly present the related parties. Now, the last bit is legal and regulatory compliance. Management is responsible to ensure that the entity's operations are conducted in accordance with the provisions and laws and regulation, including those that determine the amounts reported on the entity's financial statements. So in other words, management must ensure that you are in accordance with all the provisions of laws and regulation. The auditor, right, is to obtain an understanding of the legal and regulatory framework and how the entity ensures compliance. We are not giving an opinion on your legal and regulatory compliance. We have to obtain evidence of compliance with those that have a direct impact on the financial statements, right? If you have told us of those laws and regulations and they have a direct impact on the financial statements, we would have been asking for them anyway. So like your HST and your payroll and those kinds of things, we would be asking for those anyways. We also obtain written representation of compliance from management. So you will get a representation letter at the end of every audit, and you need to read that, because you read what you're signing, because you're saying, yes, I am in compliance. The organization is in compliance with all the legal and regulatory things that it is supposed to be, right? Now, from the auditor's perspective, if we see non-compliance, we have to discuss this with management and determine if there is an impact on the audit opinion. Now, what you might want to do, consider the following, because legal and regulatory compliance is really humongous, right? There is just so many things that you have to comply with. And I mean, charity itself is a law. Charity is embedded in law. Everything about it is legal. And so you might want to consider the following to assist in the prevention and detection of non-compliance. Monitor your legal requirements and to ensure that your operating procedures are designed, and ensure that your operating procedures are designed to meet these. You might want to think of engaging your legal advisors to assist in monitoring legal requirements. You might want to maintain a register of significant laws and regulations with which the entity has to comply. And I saw I'm going to show you, I saw another, a checklist, and I'll send it out after. But there's this checklist that, there's this lawyer that I follow, Mark Bloomberg, and there's also Miller Miller Thompson, a lot of these law firms, you can follow them and they have a lot of information, free information available. And this guy, he has a checklist, a legal checklist, and it's like 45 pages long for charities. So if you go on his website, you will see it as well. Okay, so I'm going to pass over to Nehan now. I will stop sharing. Okay, over to you, Nehan.
So can you guys see my screen? Okay, perfect. So what I'll be talking about is, just a second. Yeah, what I'll be talking about is what the audit process timeline looks like. So this is what you see on the screen is what we call is that ideal timeline, and this is for an audit. So an audit is like the maximum level of assurance you can get. So that involves the most amount of work. So this is the maximum timeline that it can go. Any other kind of assurance engagement like a review or a special engagement would ideally be less days than this. So before we start an audit process, it is very important that we get the engagement letter signed. So that's not included at whatever time that takes. It's not included in this timeline. This timeline starts when you have the books ready for audit. That means that all your transactions are in the books. You are ready with your supporting documentation, everything, and you will not be making any changes to the books. And you give us access to your books of accounts so that our team can go in, pull out the reports, start testing all those transactions, start requesting for documents and all of that. So that's the day one when we get access to the books. So these are some of the milestones we say, which are involved in the audit process. So first would be the audit planning. Once we get access to your books, our team, including the partner, the manager, and the team who will be working on the file, would engage in a planning session. We would reach out to you to have a planning meeting with you guys to understand what the management's opinion of the risk is, if there are any other risk areas that management has already identified. There are some risks suggested by CPA Canada and CPA Ontario, which we have to consider. So that will always be there. But other than that, we discuss with you, we go into your books of accounts to understand what the transactions have been throughout the year and do an audit planning. It usually takes about a day or two for our team to get that done. And after that, you will receive an audit requirement list, which will detail down everything from the smallest thing that we need from you in a Google document form. So you will share it with you. So it will be sort of a real-time communication where you can put in a comments and we can respond to you on any of the requirements that we have. So you can expect that after 2 days. Then we give about 5 days to you. We expect that you can arrange all of that in a week for us. That is based on the expectation that when we start the audit, you already had all of that in place, and now you just need to pull what we have requested and give it to us. So we'll be talking about how to get audit ready after a while, but that's what you need to do before starting the audit so that you can get this job done in a week. After that, we do the audit fieldwork, which is basically testing, doing our analytical tests and substantive testing, checking your agreements and making sense of what has happened and if there's something wrong with the financial statements, which usually takes about 20 days. That involves our senior accountants working on the file, the manager reviewing it, the partner doing the second review, and us giving you the draft financial statements. So that takes about 20 odd days. Now, all of this depends on how quickly we get the information from you. So when I mentioned that a week for you to get the information ready, we expect the major portion to be ready, not everything. So once we have the major information with us, we'll start working on it. And during these 20 days, you can still send us the rest of the information. And after that, all of these, the last 2 weeks or so, this will be our conversation with the higher management. We'll be giving you the draft questions, any changes that you might have noticed, all of those things. We'll be in touch with you. We'll discussing all those changes, make those changes, and then move it to the level of board's approval. So you'll get it to the board. Once the high management is comfortable with what the financials look like, then board will have a look at that. If they have any questions, they can reach out to us. We usually present the financial statements to the board or the finance committee if you have any, or the audit committee, whichever is the ideal one at your organization. and that is where the board approves it. And once we have the board's approval, we sign the financial statements, and it's done. So this usually takes about 45 days in an ideal scenario, but this can or cannot get delayed depending on, it can be shorter or longer depending on how quickly we get the information and how complicated your transactions were. One more thing that I want to highlight here is when the books, a lot of times we face one issue is that the opening balances are not agreed with your previous year's audited financial statements. So that is one major check that you should have before handing over the books for the audit, because that will just delay the process, and it can be an issue on both ends, because management would need more time to get that done, and the audit team would just be waiting for it. So it will just prolong the time. Now I would like to talk about some common qualifications that we see in not-for-profit organizations. Usually qualifications is a negative thing that people see it as, but in not-for-profit organizations, a standard or a expected qualification is around the completeness of donations and fundraising revenue or cash sales. But we can avoid this qualification by keeping a good control around your cash donations. So the qualification that I'm talking about is that it's not about what you have recorded in the books, but it's about what might be missing from the books because you are collecting some cash donations. So there'll be no trace of it. So it can go untraced completely from the books. So you have to have a solid control in your organization, or you can avoid getting any cash donation. You can have a policy to have only online transfers and no cash donations, so you can avoid this qualification. So in this case, we do not work with materiality. It's always there, this qualification, but we can work together to remove this. Another qualification that we have seen is donations in kind or contributions in kind. Now, not-for-profits and charities have an option to not record this in your financial statements if you want to. But if you choose to record it in your financial statements, you need to have a good control around these as well, and you need to show us that nothing is missing out of your records. For example, if you are collecting, food in donations, so you have to keep a proper track of when it's coming in. So you have an inventory listing, who's testing it, who's doing a second review of those, inventory in, inventory out, all of that. And you have, since it's in kind, you also have to substantiate the value, the dollar value of those inventories. So the day you are getting it, you have to get a market value or something and put it against it. And then whenever you're donating it, it goes out and you have a closing balance. So there's an accounting standard for that as well. But that's up to you if you want to go through that process. If you want to show it as your revenue, you need to have a control and you have to follow the accounting standards for that. Now, revenue cutoff is when you do not follow the accounting standards, because accounting standard follows the accrual principle. I'll give you one example. So when you get a grant and if it spans outside your fiscal year, so you cannot record, if you've received the entire amount, you cannot record that entire amount in your fiscal year if it has not been spent on the restricted expenses. So if you have received $50,000 and 10,000 is yet to be spent, based on the restrictions that you have on that grant, that is not to be recorded in your revenue. And this is tricky for newer and smaller organizations, but a lot of accounting softwares have given you services to track your expenses for all the grants, and it makes it easy for you to identify what needs to be deferred for the next year. It's also good for you to keep a track of what you need to spend and what you have available to spend in the coming year. So it's good for internal budgeting, planning, and all sorts of things. So all of these are standard qualifications that we see, but all of these are avoidable, and we can discuss whenever you're working with us on how to avoid that. Now, audit pain points. So audit pain points, we're discussing these not just from the auditor's point of view, but also the management's point of view. So the first would be short timeline. Now, audit, any assurance engagement has strict guidelines and strict requirements from CPA Canada, and it's not possible for any auditor to give opinion unless they have done a thorough test. So we need the timeline that I just showed you. It is needed we cannot cut short on the timeline because we need to do all our tests that are required. And it also, having unrealistic expectations on both ends will just create pressure and stress for both the parties. So we need, anytime you're requesting a quick audit, it has to be possible. So there has to be ways to go about it. Maybe you can help us, get the information quickly, or you can have the schedules ready before the audit. Then maybe we can discuss. But a short timeline is not always possible, and it can be painful for both the parties. Insufficient supporting documentation. Again, we understand that you might not have supporting documentation for everything, but we can always discuss. You should try to keep supporting for any transaction that you're recording, but if you don't have anything, we can always discuss on how to work with an alternative documentation, because we need an assurance that it was a fair transaction and it is recorded correctly. We are not hellbound on the one particular document. We just need assurance, that's all. Then sharing multiple documents in multiple transits, it's fine if you do that, but it shouldn't be like we are getting one document each day over 30 days. So maybe you can collect documents, like maximum number of documents at once, give us at the start, so we can work while you are working on the rest of it. So that makes it easy on both ends. So you also have a track of what you have shared, and we have enough time to work on the documents till the time you're working on the rest of it. And now, not understanding the roles and responsibilities of auditors and management. This CELA has already touched base on this. So we need to be clear that we are only auditing the financial statements, and the management is responsible for preparing it. We will just make sure that it is agreed with the requirements of the accounting standards and the auditing standards. We can guide you, help you out with how you should be going about it, but we cannot be involved in your bookkeeping tasks at all. Then insufficient ownership of financial statements. This is again similar to what we have just discussed. So the management has to take ownership of the financial statements. When we're just auditing it, we do not own your financial statements. Next step. So whenever you are ready, all of our clients, which we have already discussed, and we'll be working together this year. You might be receiving the engagement letters this week or latest by next week. There was a little bit of delay because of our firm getting rebranded. So we had to get a few things done, but you would have all the engagement letters by this week. So you can just sign those. And so once that is done, we will just to get started on finalizing your books of accounts and book a planning meeting with us, so we can agree on a timeline when it is to be ready and the expectations of both the parties. And once the planning meeting is done, the audit timeline that I just discussed will start, and we should get it done in the agreed timeline for that. All right, so next slide. Sila, you want to take this?
Okay.
Yeah.
Yes, so we'll just jump back in on just some best practice tips for maintaining adequate books and records. So from the management's perspective, you should use qualified bookkeepers and finance personnel to maintain your books. I know sometimes, it's a volunteer and all of that, but sometimes it is the worst thing to just have it being done by someone who is volunteering, because they're not spending, with all the best of intentions, they're not going to spend as much time on it. Right? So just find a good qualified bookkeeper. It's an investment, right? Review your grant agreements to determine reporting requirements and eligible items. Many times you get the grant, you're so happy for the money, you start spending, and you don't realize that you're spending on things that are not eligible, or you're spending, outside of the budget. Acknowledge your sponsorships and donations acknowledge your sponsorships and donations, so that you can set up an audit trail. Because many times too, we as Neha was saying, we want something to show that this is a sponsorship or this was indeed a donation, that it's not just money coming in. Like we need to be able to acknowledge that, and to know that it is also not only that it's money coming in, but what's the timeline? Is there any restrictions on it? So you would need to acknowledge it if the donor doesn't send you something. And this was really rampant during the COVID time when people were just depositing monies into people's bank accounts, right? Into our organization, not-for-profit organizations' bank accounts. Review the financial statements each month so that you catch the errors before they accumulate. And that's management is to do that. Monitor your actuals, the budget, and set up, as Neha was mentioning, set up robust controls around cash transactions. If you do that, it may avoid audit qualification. Next slide, Neha.
Yeah.
The finance department, again, for you, best practice tips. Consider whether fund accounting is beneficial to the organization, because you may want to look at fund accounting if you have different funding buckets and different grantors and different programs that you might want to track. Treat each item that you receive as it is to be ready for audit. For example, code the transactions to the program. So if you get that invoice immediately, if you're using fund accounting, code it to which fund and which account, write it on it so that it's easy for everybody. Attach the invoices or other accounting supporting documents directly in the accounting software. Your bookkeeper, if you have a good bookkeeper, they will know how to do that. Put in the HST rebate rate directly in the accounting software. And that way it calculates it straight off the bat for you. If you're a charity, if you're a not-for-profit, don't do that because you may or may not qualify for it. Input the budget. If you have a budget, input it to QuickBooks in order to facilitate tracking. So that will help you in your finance, in providing reports to management so that they can see. Try to store all the grant agreements for ease of reference, like digital storage of the documents. Document accounting memos for how to handle non-routine transactions. We have a client now, we don't do their audit, but we do their bookkeeping for them, and they're very meticulous about documenting accounting memos for things that are non-routine. Very, very meticulous. You'll see right now, they probably have 10, 15 of those accounting memos. Deferred contributions, Neha touched on that. That's like your your restricted funds. Ensure you have a methodical way to deal with them on an ongoing basis. Next slide. Neha. Other insights in running a not-for-profit: tap into resources that provide you with grant information and explore funding from private foundations, right? Because we always be looking at the same sources and everybody looking at the same sources. Try to explore private foundations and other sources. And if you can, use the services of a grant writer. Or if you have a team member, if you can afford it, who has a team member who has grant writing as part of their duties. But the reason you want to use like a grant writer is because they likely know, first of all, they may have templates, so they're able to get the grants done faster than you can. They will probably know of all the various different grants that are around, so they may have their pulse on that. So it's always good, right, if you can, to invest in the services of a grant writer. Be careful, because I was just hearing about this. I don't know, I'm not recommending any particular grant writer or anything, but be careful of the payments that you make to the grant writer to make sure that if you're paying from a particular grant, make sure that the grant allows for it, or there is some way that you can actually account for that within your within the particular grant. Or maybe it is maybe it might be part of your operations. Keep a funding schedule so that you can track. This is a good tool to have handy, so you can track funding and potential funding. So it's like a wish list. Ensure when you apply for grants, ensure that it includes funding for operations. So that's where you can put stuff like your grant writing or accounting services or other things that you're going to need, bookkeeping services. If you have, try to see if you can segregate operations funding from program funding in different bank accounts. Yes, Neha. Next. Outsource some of the functions where practical so you can focus on the organization's impact. So for example, social media, HR, because you have places that do HR, like I can't remember the name of this place that one of our clients uses, and they deal with all their HR issues for them. Outsource your accounting to a bookkeeper, right? Who can get it done, or an accounting firm who can get the accounting done for you. Social media, you outsource that as well. Grant writing, which you spoke about, outsource some of those external functions where people can do it better than you and faster than you. Conduct a financial internal control review at least every 3 years, right? So you would get an external audit firm and or a management consultant who specializes in this to look at, do a deep dive on your internal controls. That is where you would get a deep dive and see, are they operating properly? Are they designed properly? And maintain your financial policies and procedures manual, the one that the board would have set up first, the policies. Okay, so thank you, Neha.
Yeah, that was very good
That
detail.
was
Yeah. I
okay.
hope everyone enjoyed the information shared by Celia.
Yes, we will see if there are any questions. I'm going to check the chat if there are any questions and just quickly go through them. I'm mindful of your time. So there was one in small not-for-profits without a finance department. Who prepares the board financial package? Well, the board financial package, you can ask it can be outsourced either to, say, an accounting firm or your bookkeeper. If you have a bookkeeper or bookkeeping firm doing it, maybe they can do the board package, but it is not something that they design. It has to be in tandem with you as the management who decides, and the board, to say what it is that you want in that package to allow you to be able to exercise financial governance. So they can't just say, oh, here is the board reporting package. They have to talk to you about what you want. So for example, our firm, based on our experience, we know certain things that are good to have in a board reporting package. So we have a standard template, right? So maybe your bookkeeper or your bookkeeping firm may have that as well. Okay. Another, does annual revenues in the not-for-profit include grant revenues? Yes, it does. Then, yes, the notes will be sent. There are I don't know, there are no notes. It's the slides will be sent out. If you use volunteer or okay. Yes, so we'll share that. I think that, yeah, okay. So I think those were all the questions. If there's any other questions.
Thank you so much. So if you have
Yes.
any questions, you can unmute yourself. Feel free to jump in and ask your questions. We're just gonna wait for another
Raise your hand. Yeah, you
minute or
can
two.
actually raise your hand, and then we'll be able to see if you had a question. Oh, I think I see in the chat that we have a grant writer on, and she is actually posting some upcoming grants. Well, I see one from Canada Post, but I think Canada Post need a grant themselves. So, okay, it doesn't look like there are any questions.
All right, so if there are no questions, we're going to end the presentation here. So once again, I want to thank you all for making the time to join us. And if you need any of our services, whether it is audit, whether it is bookkeeping, whether it is any kind of services, training specifically for board members, or training for bookkeepers. If you have volunteer bookkeepers that need training or paid bookkeepers that need training, just let us know. Those are services we're happy to offer to you. So thank you again. Enjoy the rest of your evening. Bye, everyone.
Bye-bye.
Everyone, bye.
Guys, you can stay on. Neha can stay on after everybody else.